Hello everyone, welcome to our second video during the trading session of the day. At Market Traders Daily, we look forward to produce the best actionable content during the European, North American, and also the Asian session. Today we're gonna have this second video at the end of the North American session, and we have a lot of good information. We have an a very big announcement. Everyone at Market Traders Daily is super excited to share with you our newest software for the currency markets. And also we have a very important information that we want to share in the markets, what we expect to happen in the next 12 to 14 weeks as far as the US dollar, and also something that we thought it will come across as a surprise, but we found evidence that indicates that this is exactly what is happening, and you should know. We want you to know exactly how you can position yourself and take advantage of what is unfolding in the markets. As usual, please remember that all these videos are for educational purposes only. We make our best to produce the best information. Nevertheless, we are not financial advisors at all. So you must understand what is your risk profile, and although you may want to do this, you may want to take these ideas and apply them, always look at it based on the risk. Always measure your risk, okay? That's very important. Please remember that past performance does not constitute future performance, and at all time you must protect your funds, your capital. You have to protect your capital. Number one rule, and number two, and number three. Never lose money. That's the most important. Okay? Having said that, let's go. So, mainly what we want to share with you is how China, we have an idea in how China will crush the US dollar. But pay attention, it will be short term. So, we know that we know the tension between the US and China, the trade talks. There are a couple ideas that we have put out there for you to take advantage of a rebound in the short term. But in the more medium term, there's one opportunity in how China is crushing. China crushes right now the US dollar. You don't see it yet because these positions, they take time to build. And then it's like a big, like an avalanche. That's how it unfolds. Slowly starts building up and then whew, it goes. Now, what is going to happen right now, what is actually taking place, is that on the media, you hear a lot of this like China, it's considering, Chinese authorities are considering to just dump US Treasuries. It's not going to happen. And if it's in the media, it's just a lie. It's not true. Because the closer you are, the less you see. And now, if you take a very broad view of the market, what is the asset that is surprising? And please don't talk to me about Bitcoin. Let's just talk about tangible assets that we can really build wealth. That's the name of the game. We want at Market Traders Daily to make sure that you build your wealth not only for the now but also for the future generations. So it's gold. So China basically found a way to build their gold reserves, and that will crush the dollar in the short to medium term. We're talking right now, we already have gold. It touched last night 1,303 ounces, dollars per ounce. And this is a proxy trade that China is, let's say, using to minimize any impact of what they will lose if the US tariffs keep going for a little bit longer. As I said on previous videos, we know that they're going to make a deal. How soon? That's the only variable that we cannot really account for. Time is a very important variable here, because in the meantime, business is getting hurt. Now, before we go into that and how you can make it, how China will make you an extra $7,000 in the next 12 to 14 weeks buying gold, we have an announcement. We're very proud to announce that finally, after many years of research and ongoing studies, we have ready Osiris Ragnarok, which is, we like to think is one of our main, or will be one of our flagship products to those that are looking to automate their trading. We hear a lot about robots, algorithms taking over the markets. taking over human positions. Now you can also access one more time one of our best products. And the reason why I'm so excited to share this is because of the results, the research, backup, everything that we have studied, expected over the last couple of years, and it's ready for you to enjoy. The returns I will show you are estimations based on several capitals that we work with, and it's to give you an idea. We'll have more information. Make sure you send us an email. The email within the description of this video, info@marketstradersdaily.com. If you want to be if you want to sign up, we will send you directly as soon as we have everything ready, preparing for the webinar that will be in 2 weeks. Okay, so make sure, go to the description, you find our email, and make sure you put on the subject Osiris Ragnarok, and we will make sure that you are part of the first list that will receive an invitation to our webinar where we'll release the product. And I'm going to share with you right away. Just let me go to that so you can see the results. You get it right here. I will start just talking because I want to go back to the gold opportunity that we have, the gold medium-term trade idea that we have right now. So this is exactly how it looks. We're talking about more than between 14 to 18 months, and this is the minimum viable capital that you require, $2,000. Okay, now this of course comes with certain risk. With $2,000, you're risking 47%, 50% of your capital. You're looking at a almost $2,000 return on your money. It is realistic based on the way the software works, the ways the trading levels are designed. Very important. Now, of course, this can be $10,000 and will drop your drawdown. We have other versions where you have a $30,000 equity, and this is where you're looking 67% drawdown. It depends. Now, it's very important to mention that the risk level used on all these accounts is risk level 4. It's a high yield setup, high yield structure that we have here. You can might as well reduce the risk. But like I said, this will be discussed during the upcoming webinar. We have the first two are based on US pairs. We have other portfolios that basically they use currency crosses, and you can see the returns. 69% divided by 31% drawdown, not a bad deal, on a $50,000 equity. And also we have another one with, well, the same 50,000. We have a situation, we have a return 39% by 51% drawdown. Everything in autopilot. So if you are into currency trading, if you hear about Forex, if you want to explore, if you want to diversify your portfolio, but you don't have the time, you're a professional, you're a teacher, you're an architect, you're an engineer, and you have capital that you want to risk in the markets, measuring everything that can lead to make it a very good investment, a really good trading outcome, well, then Osiris Ragnarok is for you. So like I said, once again, go to the description of this video and send us an email, subject Osiris Ragnarok, and we will make sure you are one of the first to receive the invitation only for the release of this trading software. Okay, great. Now, I want to go back to the idea of we're discussing on when it comes to gold. Now, I'm gonna just share with you. We are here in the live account on my sister, and one of the things I want to go over is the analysis, exactly how we go step by step in looking at the technicals. We already know the fundamentals. China is not gonna just start selling US Treasuries. That's not how it works. That will affect them. Okay, so they needed to find another solution to this. What is the best solution? Find a tangible asset that you can put in a vault and transfer wealth. That's all you needed. That's what they're looking for. Now, on the technical levels, this is what we are expecting. We're expecting price action. Remember, we're above the 50 exponential moving average, and we're looking this to push to the 0% Fibonacci level. That's an extra $49, almost $50 to the upside. This will be our first profit target, but I'm looking to have an extension all the way to new highs in 2019. This will take us to July 2016 to the high $1,375 an ounce. And then the next final target could easily be $1,460. Now, this also has to do something with the retracement or healthy pullback in the dollar index. This is where we are right now. We're sitting at 97.30. The high for the month of May, 97.84. Previous high in April, 98.04. Now, it's important to remember that Goldman Sachs was stopped out of their short. It was published in the journalists at Bloomberg.com. They published this information. They were short looking 93. The timing was the problem, not the idea. And it was too early. Okay, so that was the challenge. Now, they were stopped out at 97.50. The market made a high of 98.04. So that was only, let's talk about cents, for example, $1 and a cent. That was only 50 cents. They missed out for 50 cents. What I'm calling here today during this video is for you to know that we already initiated positions short with stop loss at 98.80. Okay, above this level. So somewhere, I will say somewhere here. This is where our stop is, what actually looks part of the range. And then we're looking to target 93, between 94.10 here and 93. Why? As you can see, this is the reverse Fibonacci. The dollar is in an exaggeration overbought to the extreme, and that creates tension in emerging markets. So, also creates tension, a lot of tension in the US indexes, S&P 500 and the Dow Jones. For the Dow Jones, and go ahead at the end of the video, you will see it. You can go back to my publication on Kellogg's and where I see the Dow Jones going in the next, before summer 2020. For the indexes like Dow Jones and the S&P 500 to continue to the upside, which is convenient for everyone, the dollar has to retrace. It requires a deeper pullback. This pullback will scare a lot of investors or will make happy a lot of them. So you have to see these $3, probably $3.80, even $4 are necessary for the waters to calm. Now, this weakness in the US dollar index plus China using gold as a proxy to fight the trade wars and the US tariffs will create the perfect environment for you to go long gold. Now, these are the levels. This is something very important in this thesis, this idea that we're applying and what we take in these positions. We have everything registered. We started actually a little bit earlier with our long. We enter at $1,300 an ounce. We have that. We'll send you that. But this is what we're expecting. Now, a couple more technical views. If I take a long-term view from this bottom here around 1,046 from the high 1,000, let me just register everything, 1,120, the Fibonacci projection establishes 38.2, 1,380, which has not been touched since sometime between January 2013 and January 2014. But right now we're in a bullish range. So that bullish range goes from $1,252 all the way to $1,380. So this time, as prices we know on the monthly chart are trading above the 50 exponential moving average, we're looking for buy. Prices trading above, we favor going long. Prices trade below, we favor shorts. So common sense in the direction of the trend, we are looking to add longs. Also, if you see here, 1, 2, 3, 4, these are lower lows and higher highs. So we need a new high here to complete the sequence and then go short, which eventually will come when the dollar index finds support. But we are 3-4 months away from that scenario. Right now, the idea is to go long. Well, in that case, where is your risk? Because everything we do has to be measured. We must measure our risk. What is our risk? Of course, I will use the low of the month of May, $1,266. You can use 1,260. That will be perfect. And that basically will give you let's put it here. Okay, that will give you $35 risk, looking initially for a 50. It's a 1 plus a little bit more on your risk-reward ratio. Then to the new high that we're expecting in 2019, that's $78, you have a perfect 2-to-1 risk-reward ratio. Okay? Great. Now, one more view explaining how I got to this conclusion. This is the initial expansion sometime in August 2014 all the way to this section, $410. It goes all the way to somewhere, let's have it here, $727. The pullback goes all the way between the 50% Fibonacci to the 61%. And then here it goes. Now, if I take again this Fibonacci, trend Fibonacci from the low almost to this high, I can see that we're still in a bullish trend. It is a bullish trend only if prices close below this 61.8%, $1,071, then we can say that prices will go back to the $900 level. That's not the case. Prices stopped here and continue rallying. This actually is another leg of the bullish trend, the long-term bullish trend that started somewhere in January 2001. Now, where do we have the first resistance? 38.2. $1,396, which is not too far from the 1,374, which is the middle of the range, creating this new high in 2019, similar to the high back in 2016. So there is a relation. So what I'm calling here is that we can easily extend to $1,396, and as usual, fear of missing out, FOMO can push easily prices above. Now, the Fibonacci projection indicates that we should stop somewhere 1,460. If this were to take place directly, because what happened is on the different scenarios that prices can hit the new high, and then pressure of sellers, which has been here and here, can come and invalidate the continuation to this range. In that case, we'll have to take a look at what the US dollar index is doing, but definitely this is something to consider. I'm calling the surprise in 2019 long gold, and gold prices making a new high that no one was expecting at the beginning of the year. So either we are making a high and a new top at 1,374, 1,390, or we are breaking the barrier, going as high as $1,460. This in conjunction with weakness in the US dollar index, then we absolutely can see dollar index in a deep correction all the way back to 93.10. Now, please remember, only a close and open below the 61.8% Fibonacci, 91.90, 92 level will indicate that the US dollar bullish run is over. Until that happens, we have to be prepared, because at the end of the day, the dollar can make a comeback, strike back, and go all the way to 104 to create a final technical pattern, a double top, and then eventually sometime between 2020 and 2021 look to create new lows all the way below the 88 range. Okay, so this is an idea that I thought it was important to share with you. And the most important, just to go back here, is that with one standard lot right now, all the way to this level, you can make up to $7,000 in 12 weeks. $7,000, you will be risking estimated between $2,500 to $3,000, depending where you allocate your stop loss. If you take the low of the month, or if you decide to take it all the way to $1,260. It all depends. But with one standard lot, you could be making in the next, potentially making, if all things are equal, and we keep on the Chinese government keeps helping us buying gold as a proxy, not throwing away US Treasuries because that will hurt them, then we will be in for this trade for the next 12 to 12 to 14 weeks, and that's how you can actually make absolutely $7,000 extra in the next 12 to 14 weeks. Again, please keep in mind the invitation. Make sure you subscribe to this channel. As usual, the invitation that you join us at Market Shares Daily for all this sort of fantastic content that can really improve your trading and investing. Remember, in the description you will find the email address. Make sure when you email us, subject Osiris Ragnarok, and in about a week you will receive an invitation only to know more about this particular software to trade currencies. Okay. Again, my name is Jose Ricardo Han, editor of the Prosperity Digest newsletter and product specialist at Market Shares Daily. I want to thank you for watching this video, and I'll see you in the next one.